Hello, everybody. Nice to have you with us. Welcome one, welcome all to everyone who's going to be joining me today. I wish you good luck in everything you're doing in your trading, and thank you for coming. So this is me, Richard Perry, market analyst for Infinox. Now, this is the IX Trading Room, a live webinar that we're going to be discussing markets. I'm going to be talking about the things that I just discussed in the Instagram video that I just posted. I'm going to talk about market sentiment. I'm going to be talking about the Australian dollar. I'm going to talk about equity markets and also the oil price as well. But before we get into that, before we get into the detail, got to discuss one small thing, which is the disclaimer. Very important that you understand that I'm going to be talking about live market information. I'm going to be talking about this platform here, the IX1 platform, live market information on that. And please just understand that I'm not going to be giving investment advice. No. This is all just for your information purposes only. Very important that you understand that, just for your information. What you choose to do with that information, that's up to you, but that's just for your information only. Anyway, right, so let's get into this. So a few things that I was going to discuss today. We've got about 15-20 minutes as per normal, so not much time to get through it, so let's get going quickly. Now, first of all, starting off with something that I discussed on the Espresso report today, which is the inflation data for the Australian dollar. Inflation came in lower than expected. Dollar chart up there. Inflation lower than expected in Australia, dropped to 6.8%, which was I think the lowest since June 2022. So basically what that means is that there's less pressure for the Reserve Bank of Australia to hike interest rates. The hike that they did back in early March was to 3.6%. It looks increasingly as though the data is telling us we've got inflation lower, retail sales lower, increasingly as though that this could be the last rate hike for the Reserve Bank of Australia. So what does that mean? Well, Australian dollar looks like it's going to be under a little bit of pressure. What we have seen, I'll show you on the data here, forex major performance versus the dollar. In the last month, we can see that the Australian dollar is at the bottom of the pile. Interesting, and I think that that's going to continue, basically because the Reserve Bank of Australia looks like it's now at the point at which it will stop raising interest rates. Markets are pricing for rate hikes back end of this year, rate cuts back end of this year, and I think that's going to weigh on the Aussie performance. You've got the ECB, for example, European Central Bank still hiking. You've got the Bank of England probably going to still hike as well. Currency crosses, I should say, with the Australian dollar, that should therefore mean that the Aussie is under pressure to the downside. We can see that. I think Australian dollar versus the US is sort of a little bit of a key pivot area. We can see that here, I think, between the sort of 67 area, 67.80, big resistance overhead. It's been struggling around that resistance in recent days, and I think that could be a point at which it could start to fall over again. But if we sort of go back, I scroll down my list here, actually, let's do it the other way. GBP AUD, bang. We can see that this move higher, put an uptrend on it, trend line, bang. Move higher. Australian dollar is looking as though it's going to still continue to be under pressure. That's broken out to the upside. So I think that, for example, Australian dollar versus sterling is one that looks good to the upside. A little bit stretched. Maybe wait for a pullback on that, I would be thinking. But it looks like it's got good support around this breakout area. And you sort of put the crosshair on it, you go 82.70 area, a little bit of a pullback. You would break the uptrend, but I still think it's a good breakout support area, and that will allow the RSI just to unwind slightly. So it's looking good there, I think. Similarly, I also think that Euro Aussie is also looking positive to the upside. Bit of a consolidation, didn't break out or decisively. I'd sort of just failed to break out this morning, but again, strong momentum. I think little bits of an unwind. You can see that back at 60. I think that could be buying opportunity area on that. But I think if you sort of zoom out here, you can see that it sort of really is testing key resistance. And if it breaks out above that, you could see the market moving back towards that sort of 164.50 area quite quickly. You can see that it's fairly important resistance it is testing at the moment. So closing decisively clear of that sort of 62.50 area, that really does open the upside on the Aussie. So what we have, I think, is Australian dollar underperformance. It looks like that is a fairly sort of a consistent theme, I think, certainly against the euro, sterling, and yeah, I think it's positioned for that against the Australian dollar versus the US, as I showed you just now. Little bit less so because the US dollar is sort of teetering as well. The US dollar looks like it's going to be underperforming, and I think that could that means that the Aussie versus US is sort of a bit of a near-term crossroads. But right, let's get on and look at the next thing I was going to talk about, which is sentiment. Broad sentiment looks to be improving. Positive thing. Why is that? Now, we've had no real bad news about banks in the last few days, which is no news is good news in this situation, and that is helping to settle the nerves of the markets. Now, there was one interesting move that happened on Friday, which was Deutsche Bank in Europe, credit default swaps. Haven't really got time to go into a great detail about credit default swaps. Basically, it's a product that's an insurance product against the default of a bank, basically. And subsequently, credit default swaps, there was one big trade, one big €5 million trade on the credit default swaps of Deutsche Bank. And subsequently, the credit default swaps went bananas, went through the roof. And that sort of sent markets sort of tongues wagging and fear flowing through markets again about whether Deutsche Bank was the next domino to fall. But basically, effectively, it was just one trade. So it's just sort of unwinding a little bit now. And I think markets are calming down about Deutsche Bank, but it's possibly still in the headlights of the sort of selling pressure. But I think it's something that just keep an eye on, but nothing yet to be sort of panicking about. But broadly speaking, we've seen that volatility is falling. Now, let me show you a few volatility charts very quickly. Here, bond market volatility spiked through COVID highs, spiked through Russia invading Ukraine, few spiking highs that we saw back in the middle of 2022. However, this banking crisis for the States took it way beyond all of that. But it's now starting to normalize. It's back around the 155s, still elevated, mind you, still elevated, but certainly not anywhere near as much as it was. And you can see on the currency volatility, that is unwinding now. So currency volatility falling, that is unwinding, that's a positive. Let me show you average true ranges. Average true ranges, the average true range is basically the distance between the low of the day and the high of the day, how big that daily range is. The wider the range, obviously, the more volatility. The smaller the range, the tighter the range, less volatility, less panic, basically. And we can see that these average true ranges are now falling away again. Aussie, sterling dollar, and also euro dollar as well. So it's starting to come under a little bit less of a problem there. So that's, again, a good thing for markets. Let's show you European equity markets volatility, DAX volatility, the VDAX falling away. Again, back under 20. Look at it, spike up towards 50, but it's quickly come back lower again. So basically back to levels where it was previously. So that's a good thing as well. And finally, let me show you on the platform. I can show you the VIX, which is the S&P 500 options. We can see that there. If I show you that full screen, you see that volatility on US S&P 500 options is falling, and that volatility falling means that there's less basically there's less panic, there's less sort of appetite to buy short puts which are short protection or short protection for portfolios. So subsequently, the price of the options falls. That tends to happen when volatility. That tends to happen when markets are far more calm about generally what's happening, and that's a positive. So add all this up. Where am I at? What does this mean? Well, this means that equity markets. Let me show you some equity markets. Equity markets are starting to push higher again. We can see that S&P 500 futures are tracking higher. Now, this again is a good thing. Obviously, equity markets moving higher, so volatility coming down tends to come with more calm equity markets. Calm equity markets tend to be positive equity markets, and we can see that S&P 500 futures are now pushing higher. So that's a positive, but can it get through the resistance? Let me just zoom in on this resistance. We can see here the resistance. I've written it down. 4082, crosshair 4082. That was a 6th of March high. Okay, so can it get through that? Well, it's looking to pressurize that resistance. You can see here with the RSI at the bottom. Let me get this. See here with the RSI at the bottom, moving higher. Can it get through? Can it break out? Well, the RSI is just starting to get to a more positive position, so that's a good thing. Above 50, positive momentum tends to again be helping markets higher. You can see that not broken through the resistance yet. 4082, that 6th of March high. 4070 was the rebound high that we saw on the 22nd. Again, resistance area. So I did that and then did NASDAQ futures. NASDAQ futures are, again, really, it's interesting that what has happened, obviously, I sort of touched upon this last week. What's happened is that the growth stocks have massively outperformed in this rebound. And that is because bond yields have fallen so sharply. Equity expectations of interest rate hikes for the Federal Reserve have fallen so precipitously that has been really helpful for growth stocks. Falling bond yields are positive for growth stocks, and that's positive for the NASDAQ. So that's why we've seen NASDAQ futures spiking higher. And what we can see is that NASDAQ is sort of really testing the breakout level. And if I sort of zoom out here, we can see the importance of this. Look at that. Just put the crosshair on these two highs here, which come in around 12,960. So if you see that the NASDAQ closing above 13,000 on the NASDAQ 100 futures, closing above 13,000, that is a really bullish break. Certainly bullish in terms of sort of pushing the market onto the next move higher. You can see that there is sort of this run of higher lows now. Again, the recovery that we've seen in NASDAQ has been really encouraging, actually. And again, that would likely help to drag the S&P 500 futures higher as well. Now, over in Europe, okay, sorry. Over in Europe, we can see the DAX. DAX is now again, sort of trying to break high. It's been ranging, really tight range, actually. Volatility in the last sort of few weeks, obviously, but fairly tight range. And the breakout, on a medium to longer term basis, the breakout above that sort of resistance around 14,600 has held. So pull back to test that that old resistance, which becomes new support, has held. That's a positive. We can see that the German DAX is looking to break out above that sort of 15,350 area. If you can get through that, back above these moving averages, you can see the momentum improving. It's looking to, that momentum is already sort of leaning towards the breakout. And then you can start to think about maybe retesting with positive momentum, maybe even retesting the highs again around that sort of 15,700 area. So DAX is looking more positive. FTSE 100 as well. Sorry, UK 100. FTSE 100, UK 100, whichever way you want to call it, is breaking higher again, looking to move through that resistance, 7588, key resistance, but certainly got a lot more work to do in terms of the momentum compared to, as I said, the DAX and NASDAQ, S&P 500, all in a better position than FTSE 100. FTSE fell much sharper than other markets did, but it has to get through that resistance, 7588. That's the key level to look at, 7588. So watch out for that one. Right. Okay. Finally, I've got a few minutes. Just going to talk quickly about oil markets. Now, what we've seen is the oil has been sort of rebounding hard, but I mean, it rallied from the low 70s to above 78, pushing back towards 80. This is a crucial moment for oil. If you look at on a technical basis, now, before I get into the technicals, the fundamental side of oil, why is it moving higher? You've had supply issues around Kurdistan in Turkey. You've had a recovery in demand following on from the improvement in the outlook on the US banking sector. That certainly helped as well. So all this has sort of fueled a bit of a rebound in oil, but is it now able to get through this resistance? All this overhead supply, all these lows, if I sort of get the lows that we had on oil are all resistance, overhead resistance. And that comes in between the low 75.50 up towards 80.55, I think it is. Yes, 80.50. So 75.50 up towards 80.50. Big resistance overhead, big overhead supply. All these old stale bulls, people that traders that bought oil throughout basically December, January, February into early March, they are now resistant. They are sitting in these positions thinking, what do we do? Do we continue to hold this? Do we think it's going to continue to rally? Do we use this as an opportunity to sell? Because look at this, oil consistently, lower highs, lower lows. Is this an opportunity to sell? Technically, if it can get through this resistance at 80.50, that is a really important moment for me. That's an important moment to suggest that there is a big improvement in the outlook. Now, RSI momentum, bang on 50. RSI momentum has struggled around the 50 mark, 50 to 55 historically. For months and months and months on Brent crude oil has been a point at which we see the resistance coming in. So is this the moment at which we start to see this falling over again? This is a big crossroads moment for oil. Can it continue higher is the question. It's a difficult one because what we have seen a couple of times is that oil has sort of broken through resistance, looked like it's starting to recover in a decisive manner. Got that in November. We saw that again looking more positive. If I sort of zoom in a bit more, we saw that move back in January again, or moving through resistance and just falling over again. So that is the consideration that I've got, is that it needs to hold the break. If it moves above 80, it needs to hold that break. And any sign of oil sort of faltering again, we could see another renewing sell-off. But certainly oil is at a crossroads again, but can it sort of break through that resistance and hold the break is the question. Whew. Well, there you go. So plenty to think about today. Thank you very much for coming. I think I've got everything in that I needed to speak about. Now, anyone who's watching on YouTube, please click and subscribe the bell. Please click on the bell, which is the subscribe button, and it gives you notifications for our upcoming webinars, videos, all that jazz. Always something to think about there. So click and subscribe and you can get more of our content. I would also say thank you very much for coming, and I wish you good luck in your trading. And I will speak to you again next time, always the same time, Wednesdays, 4 o'clock UK time. Thank you very much for coming, and I will wish you good luck, and I'll see you next time. Thank you very much.